Alright guys, it is the end of the month, and that means it's time to give you a full recap of everything that happened in my dividend growth portfolio. Now, October has been a rough month. It started off pretty good, up about 2-3%, but the second half of the month was much different, down about 5% in just 2 weeks. But overall, the market was down just 3.2% for the month. Now, coming to my portfolio, past 1 month, we are down 2%. And that's mostly because I have treasury bonds here. XYLG was down 2%, IXN 1.3, Divo, more conservative, down 0.88, and QGrow down almost 4%. But I gotta say, overall, I'm very happy with my holdings. You can see my strategy here. I have 2 growth ETFs, which are QGrow and IXN. These are more volatile. There's no guarantee over a long period of time these will have any better returns than the S&P 500, but due to the higher levels of risk, that possibility is there. And then Divo and XYLG act as a counterweight. They are less volatile and have consistent realized gains in the form of high monthly dividends. And if we end up going through another period like 2000 to 2008, when the market was essentially flat for a decade, then I'll be really happy I have funds like Divo and XYLG and not just growth funds. But let's get into the income. So as I just mentioned, Divo, XYLG, and SHV pay me every single month. I don't have the payments quite yet, but the amounts for all these funds have been declared, so we can go ahead and calculate what my income is going to be for this month. So beginning with Divo, their declared payment for the month of October is sitting at 13 cents per share. And this is a little bit on the low side. A big complaint people have with Divo is that their dividend is not really growing at all. I mean, we can go all the way back to 2019 and their dividend payments are the exact same. However, I'm still pretty bullish on Divo. I like the holdings, the methodology behind the actual strategy. I'm a huge fan of it. And the yield is still a very respectable 5%. So for now, I'm going to continue to hold on to all 457 shares of Divo. And 457 shares times the payout equals a monthly distribution of $63. My next monthly dividend ETF is XYLG. I love this holding. I know it doesn't have the best long-term performance, but it's consistent, reliable, and it pays me a huge dividend. Right now, the yield is 5.5%, and the latest dividend for the month of October is a similar 13 cents per share, which, unlike Divo, is one of the highest in recent history. So with XYLG, technically the dividend will grow over time, just like how the S&P 500 has a modestly growing dividend over time, but most of the income is generated by the covered call strategy, and that generates more income during volatile markets. And as we saw, October was a pretty bumpy month, and that's why the distribution was higher this month. And I gotta say, I really like that relationship. The more tough the market is, the more income I generate. And I have 484 shares of this ETF. 484 times 0.13, what was it, 2? Equals a very similar $63 this month. And then finally, SHV is my short treasury bond ETF. This also pays every single month, and it holds bonds from 1 month to 12 months in duration. And everybody knows that bond yields have been skyrocketing lately. Unfortunately, they haven't yet declared their dividend for October, but it's pretty easy to predict what it's going to be, and it's going to be similar to the previous couple of months, which were about 46 cents per share. And I have 136 shares. 136 times, what was it, 0.46 equals $62. So that means all in for the month of October, my dividend growth portfolio generated $188-ish in passive dividend income. And compared to previous months, that's a pretty solid payout. And going back last year, in October 2022, I earned $103, and in 2021, $74. So that's solid progress. Also, at the end of September, my portfolio had a value of $70,811. And today, the portfolio has a value of $71,148. And that increase is due to deposits because, as we previously saw, we are down for the month. If we take a look at my trading activity over the month of October, I have a bunch of deposits. Here's $500, a bunch of 150s, $600, and that's mostly because the market was down this month. I like to take advantage of cheaper buying opportunities. Now on Seeking Alpha, I do have a custom watch list of a ton of ETFs that catch my interest and I want to keep an eye on. And the latest addition here is ticker RDVI. This is a rising dividend achievers target income ETF. It's still fairly new, it's only a little bit over 1 year old, and this holds companies that have increased their dividend value over the past 3 and 5 year annual periods, while being best positioned to continue the dividend increases. So kind of a unique index there. That leaves it with these companies as the top 10 holdings. I will say it is heavy in financials at 38%, but the real reason why this caught my attention is the dividend. It is nearly 10% and it pays out on a monthly basis. And it generates this yield via actual dividends from the holdings, but mostly from a covered call strategy, which uniquely is based off of the S&P 500 index. So the covered call strategy and the holdings come from 2 separate indexes. So this ETF is in the same realm as JEPI, Divo, XYLG, and KNG, which has a covered call strategy on dividend aristocrats. Again, the history is not that extensive, but over this short period of time, the returns have been pretty solid for this new ETF. It's certainly the most volatile. It goes up and down the most, but the total returns over this time is right there with JEPI and XYLG. And I gotta say, I'm pretty hopeful for the long-term performance of this fund because of that high level of volatility. It's demonstrating to me that this is a more growthy, or at least has the potential for more growth when compared to these slower growing options. And it does that while still giving you that 10% yield. But again, long term, this is still a huge question mark. As mentioned, I'm still very happy with Divo and XYLG, but I'm certainly going to keep RDVI in my watch list. And in the case that Divo or XYLG begins to underperform or fall out of favor, RDVI might be a solid replacement, along with other names like KNG and JEPI. That's it for this one. Hope you guys enjoyed, and I'll see you guys next time.